Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is October 22nd, 2025, and today on our call we have back the CEO, Eric Ronsse from Mercanto Holdings. Mercanto trades on the TSX Venture Exchange under the symbol MUSH or MUSH, and also trades on the OTC under TGSHF. The company is currently trading at 8.5 cents with about 52 million shares outstanding, or about a $4 million market cap. I'd now like to hand it over to to Paul.
Paul or Eric, either one. Thank you. As you guys can see, my video is not working. I'm having some Wi-Fi issues, so you guys are fortunate enough you don't have to look at me. You get to look at Eric instead. And Eric, thanks for joining us today. It's been a while since we last spoke. Well overdue for an update on how the business is going. New name since we last spoke, Mercanto Holdings, no longer Shroom. So welcome back, and let's jump into it. Let's get into some updates, but before we do that, remind everybody what Mercanto is all about.
Absolutely. Thanks, Paul and Trevor, for having me. First of all, it's a pleasure to be back. So for any newcomers or people that need a quick refresher, Mercanto Holdings really isn't your average cannabis company. And I don't mean that as a sort of fancy tagline. Rather, we legitimately are nothing like 99% of licensed producers out there, because they either cultivate cannabis or process cannabis or do both of those things, while in reality, we do none of the above. We've in fact developed a network of co-manufacturing partners that spans from coast to coast in Canada, where we leverage the expertise of all kinds of companies that produce all kinds of products to basically private label products for us. And we then introduce those products to a variety of markets, most notably Quebec. This, first of all, allows us to analyze market data, because in a province like Quebec or Ontario, the latest sales data from the date of the first sale of a cannabis product all the way till last night at midnight, I can tell you which products sold, how much of it they sold, the price, the attributes, the brand, the potency, everything. And so with that data, we identify what I call pain points, or where there's a gap in the market, and we attempt to introduce products into those gaps. Over time, we've seen some scale, reduced prices of products, and therefore a wider introduction of a variety of products. And if you fast forward to today, we sell everything from capsules to flower to infused joints to extracts to a whole line of funky edibles. And I think what's going to be the biggest topic of discussion today is going to be the introduction of our vape cartridge line. So as it stands today, and if you look at the last few quarters of our financials, what you'll see is about 1.5 years ago, we became profitable. We were amongst the first publicly traded cannabis companies to be able to do so and to brag about it, of course. And then our main market, where we do 95+% of our revenue, that being Quebec through the SQDC, went through a rationalization where they had on offer in any one store about 650 products, and they decided to reduce that to about 450. So we took a bit of a hit in that process, which then plunged our revenue, under the break-even territory. But we've since recovered, and we're now back roughly at that point. And with the rationalization, completed in Quebec and the introduction of vapes, for those of you who aren't aware, we obtained approval for listing of 3 vape cartridges, 2 of which are going to go in store. Now, it's important to note the vape category in Quebec is new. Vape cartridges have in fact been illegal in Quebec, and it's the last market in Canada to introduce or to open the vape market. And so with 2 products listed out of only 25 that are going to be on shelf, that obtains us exactly 8% of the shelf space. So the market itself is really what we should be looking at, but it's difficult to establish what this market size is going to be. So I think what I should be doing here is providing everyone on this call with the numbers and the data and allowing you guys to draw your own conclusions. So here are a few facts. First of all, the SQDC, which is the monopoly retailer of cannabis in Quebec, operates 108 stores, relatively evenly distributed throughout the province in order to serve all Quebecers with a variety of cannabis products. They've estimated that the vape cartridge category is going to represent 11% of total sales within a year of being launched, which is about 3 weeks from now. The launch, that is. If we look at 2024 SQDC sales, we're about $650 million in sales. So if you take 11% of that, you're at about a $68 million market. That said, last year's sales are not a good reflection because there has been some growth. The last quarter at the SQDC, they did around 220 million in sales. If you analyze that, to use a quick round number, let's say this year's 2025 sales at the SQDC become 850 million. And let's extrapolate data that is known from other similar sized markets, those being Ontario, Alberta, and British Columbia. If we look at those markets, we know that approximately 15% of the entire market is vape cartridge sales. So we're in the hundreds of millions in those markets. So if we assume that the SQDC and its 11% prediction is wrong, and it's in fact going to be more towards the 15% mark, and some people believe it'll actually be higher up to the 20% mark, but let's take 15 of revenue 2025 annualized based on SQDC's last quarter of 220 million, you get to around $850 million annualized for 2025. If you take 15% of that, you're at a market of about 125 million. Now, we have 8% of the shelf space on 2 products. There's only going to be 25 products available for all Quebecers to consume, which is a very small number if you look at it pragmatically. And you have to remember that the SQDC is a monopoly, and their mandate is of course to sell as much product as possible, but is to make sure to offer a wide variety of products to all Quebecers so as to deviate any black market business into the legal market. What that means in practice in this vape category is that of the 25 vape cartridges, they're not all going to be extra high THC products to serve that segment of the market. You're going to have 6 or 7 of them that are high THC competing. You're going to have another segment within those 25 cartridges that are mid-level THC, high CBD. Then you might have a third segment that's low THC, very high CBD, and so on. So in the 2 vape cartridges that we had approved, we have one, which we believe is going to outperform the other, is a very potent THC product with a little bit, it's a bit of a one-to-one, meaning that there's an equal or slightly greater amount of CBD. The other product is one that is a mid-tier THC, so about half the THC of the first one I mentioned, with a very high amount of CBD. So really serving a different subset of the market. So those 2 products aren't really competing with or cannibalizing each other in any way, which I think is a great position to be in. Now, we can't really say that 8% of the shelf space is going to mean roughly 8% of the sales. While the amount of shelf space that you have is certainly correlated to your sales, it's a minimal factor in ultimate sales. There's brand, there's consumer experience, there's price, there's a variety of things. So before we made the submission to the products, we looked at it pragmatically based on what we know and our experience on the market. And we decided that the right position for these vape cartridges to land in is in not the highest quality segment, but just a tier below that. So we will be a little bit more expensive than probably some of our competitors out there, and we don't know who they are or what price or what product. None of that's known at present. But I can say with relative certainty that we will be a little bit more expensive. That said, I believe truly that we have a product that's second to none in terms of quality, the hardware, meaning the cartridge itself, and anybody who knows the vape market in the rest of Canada knows that there's all kinds of problems with leakage and crystallization of the liquid inside and just bad functionality of the cartridge altogether. So we went above and beyond, and we really spent a lot of money on the cartridges themselves so as to have the consumer experience be really top quality in a good cartridge with a liquid that we sunk a lot of R&D money into to develop with our manufacturer of this, just to assure that the smoking experience of it is one that's smooth and flavorful, despite the fact that the SQDC does not allow anything other than cannabis extract to be introduced into the vape cartridge. Just as a benchmark, in other provinces, you have propylene glycol, vegetable glycerin, all kinds of other additives in there. In Quebec, all of those would be illegal. It's a pure cannabis extract vape cartridge, period, which is a challenge from a manufacturing standpoint to make a product that really is smooth. But I believe that we've hit the nail on the head in terms of product quality. So I think that's really the talking point for today, is the vape cartridge launch. They launch the 27th or 28th, depending on when the store receives their order of next month, that being November. And then, of course, as soon as we, find a rhythm in those sales, we'll be glad to announce where that puts us. Another important point for everyone to take away here is the SQDC's prediction that of that 11%, and they could be wrong about the 11%. I, for one, believe it'll be between 10 and 15% of the total market. 50% of that additional volume is going to be incremental to the market, and the other 15% is going to come draw customers out of the cannabis flower segment. Luckily for us, and I think they're right about this, we don't actually sell much flower to the SQDC. Our expertise really lies more in extracts, added value products like our line of edibles and so on. In other words, there's not much of a scenario in this where I see that vape cartridge sales go up and sales of other products simultaneously go down. I believe that this is a simple stack-on event where we get new customer base for both of our products, and we're just adding it on. Now, the other important portion of this is that for 25 cartridges, and only 25 cartridges that'll be available to serve the entire market of Quebec, the SQDC has decided to use only 2 batteries. So the cartridge itself is a hardware that you kind of screw onto a battery, which is used to heat the element to combust the liquid that's inside in order to inhale the vape that's produced by the cartridge itself. So to use these cartridges, you need a battery. The SQDC has selected only 2 batteries to support the entire network of cartridges. And one of those 2 batteries will be supplying to the SQDC. So that's another sort of cherry on the pie with this whole situation. Now, there's another development, let's say, with the SQDC in particular, the market of Quebec as a whole. It used to be that there was product calls twice a year, meaning that you would present products and the opportunity for them to take those products and put them into the stores was only twice a year. Simultaneously, they would shuffle the planogram and take products that they didn't like out of stores and replace them with new ones that they selected. So it was kind of a game of cat and mouse with the SQDC, where you had products being taken out and new ones going in, and you would recycle the inventory and figure out what to do with it. And to make matters a little bit more complicated, they had what they called the nursery program, which was essentially 25% of the stores would take on a product. They would evaluate the performance, the demand for it. 6 months later, they would then choose to take it out of the nursery or put it into the full planogram. That didn't work for a lot of producers or the SQDC because there was just too much shuffling of products. And so they've eliminated that. And so I'm happy to say that we have 2 products that were in the last nursery, which ends in a month from now, simultaneous with the vape launch, that are now going into all stores. So we're going to see some incremental sales volume. Ideally, we will. I'm very confident we will, from those 2 additional products in the full planogram. So it really boils down to the fact that, and you as investors, obviously you're looking at the valuation, you look at the volume, you look at a variety of metrics. But I think, last time I was here was with everyone, or at least with Paul and Trevor, was, I would say, about a year ago. And then since then, we had a bit of a dip, but we're still here. We haven't needed to raise any money. Our cash flow is covered. And now we have a ton of prospects in the pipeline, especially with the vape cartridges and the batteries. We have a better name than we've ever had with the SQDC. We'll continue to take part in product submissions. Now that the rationalization is complete, I truly believe that we're in the best position that we've ever been in the short 5 years of selling cannabis products that we've had. So yeah, with that, Trevor, I'm trying to think if there's anything else I can provide to you guys, unless there's anything you think I've forgotten.
No, that's fantastic, and congratulations on that. I guess the question is, it sounds like there's, anytime you launch a new product like this, there's an inventory build. There's, I imagine a whole bunch of other, call it infrastructure or capital that you need. Do you have what you need in terms of capital to fulfill what you think you need to do to properly launch this product?
Yes, definitely. Because if you recall, we don't actually manufacture these products ourselves. So I approach, in this case, we selected one of our suppliers, and I tell them specifically what I'm looking for, how I want it, down to the formula, all of it, and they go ahead and present me with some options. In this case, they and we took this very seriously. And essentially, they're covering a huge portion of the cost of all of this. And we, in turn, as long as they don't screw up on quality, supply, and price, which is determined at this point, we have to stick with them. So that's a bit of the relationship, to give you an idea, which is the same deal I have with any other suppliers that we have. So to answer your question, Paul, I don't see supply as a problem. In fact, we're gearing up for some pretty substantial sales early on. But this is kind of a good segue actually into another point. So if you think about this logically, Quebecers have not had the opportunity to buy vape cartridges before, unless they purchased them on the black market or in another province. And so a vape cartridge is 1 gram, or only 1 gram vape cartridges will be available. And 1 gram in a vape cartridge, unless you're a very heavy cannabis consumer, is not something, it's not like a cannabis pre-roll. It's not one and done. You can, puff it, put it away, come back to it a week later, puff it again. It could last 2 weeks, like it could last 2 months, depending on the user. The point I'm making is that the market will at first have trouble understanding everything that's going on. While 25 products is very few products, you might have somebody who's, desiring a high THC vape cartridge. Well, he's going to be presented with 5 or 6 options. He's not going to buy all 5 or 6. He's going to start with 1. He's going to use it for a month. And then he's going to come back and say, I'll try something else. So it may take some time for users to create their preferences. And it may take some time for the market to adjust. That's why I'm looking at this one differently than I look at other launches. Typically in other launches, it takes 4 to 6 weeks to figure out what your average volume might look like, and you can prepare inventory accordingly. Whereas in this case, I'm thinking it's going to be more like 3-4 months, maybe up to 5, before we start to see where our volume actually sits. So I won't even consider, production or ordering production based on, how can I put this, early numbers. We're doing it more in a way where we make sure we have inventory, and if things take off, there's already liquid, there's empty vape cartridges, the packaging's there, it's a quick fix to get it done. But also not overproducing inventory, because or else then we're committed with capital and we're just long inventory, which is not where you want to be, of course.
Yeah. As far as suppliers, what does your supply chain look like? You mentioned obviously the vape manufacturers and a number of other things. Is it all Quebec based, or do you guys spread it out amongst other provinces? I'm not sure.
Oh, it's very little to no Quebec-based companies. Our distribution work, I should say, our co-manufacturing network literally spans from coast to coast. We have suppliers in BC and we have suppliers in Nova Scotia, and not everywhere, but most places in between. So, to give you an idea of how we operate. So when I found out that they were opening the vape market, obviously we gathered all the info. I had a variety of phone calls with them to understand what are they looking for, what are the attributes, what are the limitations, so on and so forth. And then, in our pool of suppliers, we know who produces good quality vape cartridges. We began to approach a few, and then obviously, they knowing us now and we representing a more important portion of their business, obviously they're taking us very seriously, and a lot of them are basically partners at this point. Our success is theirs to an extent. So, they're the ones manufacturing it, but we're very involved in the process, Paul. And obviously early days, it was difficult to get it in the nitty gritty of somebody else's process. But now, considering the volume that we represent to some of these companies, they invite us to come over and to approve a variety of things and to really make sure that we're satisfied, because they know now that we know what the market wants, specifically in Quebec, amongst a few other provinces, but more so in Quebec. And they know that our formula, based on the fact that we understand the SQDC and the Quebec consumer, they have faith in our execution of this kind of thing.
Mm-hmm. And what do you see as what could go wrong here?
I've actually we brainstormed a variety of things and tried to cover all our bases. One pain point we identified is the fact that vape cartridges are no different than any other cannabis product in Quebec in regards to the THC limit. So one limit that we have in Quebec that the rest of the country doesn't have is a 30% THC limit, which I actually agree with. A lot of people disagree with that. I think it's a good thing. So in that limit, that means that you're using a cannabis extract that may be extracted in its first round at 40, 50, 55% THC, so well above the limit. And when you choose to dilute that, you're typically denaturing the product from the original cannabis strain that you're looking to get the aromas of. So it became a challenge to find the right extract to mix with this product, which turns out for one of the two products was actually a CBG extract, which is a hemp flower. But the producer that we were purchasing it from had limited quantities. So at first we were a bit concerned with how much we could get our hands on to dilute this product. But we've since identified 3 other producers who are not just happy, but really want to sell us a lot of CBG flower. Their quality's up to par, certificates of analysis check out. And we've actually purchased some of the stuff, tested it, and so we're good there. That was a concern of mine. But another bigger concern that I have, to be frank with everyone on this call, is really the position that other players are going to take. I'm very confident in the quality, the smokability, the smoothness, the aromas that come from our product. I think people will be attracted to it. But I'm concerned a bit with the lowball pricing that I've seen out of, to name a few companies, Afria and a variety of others, where they attempt to dominate the market. And to an extent it works, where they price products substantially lower than everybody else. And, that's how they drive their volume. That said, that may be attractive in the beginning to some consumers, but I know from experience that a lot of Quebecois cannabis consumers, they prefer to spend the extra $3 or $5 or $6 and get something that's quality, that smokes better. And so I think that if not early on, eventually people will lean towards our product, especially considering, like I said earlier, that it's not a one-off. You legitimately have a product that you could puff, depending on how much you smoke, from 2 weeks to 2 months, like I said. So spending an extra $3, $5, or maybe even $8 is just not that big an expense. It just takes the people to come around to trying it. That's all it is. So we'll see how it adjusts, but I'm very confident, more confident with these vape cartridges, to be honest with you, than any other product we've launched in the past. Like, we've really put an emphasis, analyzed it correctly, and it's a quality product through and through.
And Eric, refresh my memory, like what sort of engagement can you have with the consumers? I know you can't market directly, but do you market to the bud tenders? You get out there? How do you try to get your product in people's hands?
It's a great question. Unfortunately, in Quebec, we're not allowed to speak to the bud tenders, save and except for a few events that they have where, we get on a call with all of them like this, and we, introduce ourselves and say what the product is and so on. There is no marketing that's permitted in Quebec. We can't provide them with banners or discounts or swag or anything like you might see in Ontario. That's also why I think that, we may have some serious winners here, because one of the two products, the high THC one, the one we believe is going to do tremendous volume, is called Afghan Gold. And Afghan Gold at the SQDC, with the launch of this vape product, is in fact now a trilogy. So we began with what we call Afghan Gold Hash. That took off. It's a staple at the SQDC now. It's been there. It's the first product I ever launched, and it's there to this day. It still does great volume for us. As a result of that, we launched Afghan gold infused joint, so a ready to smoke pre-roll. That also does very, very well for us. And now we're introducing the Afghan gold vape cartridge. So just based on the consumer's knowledge of that product, I think we're going to draw a few people towards it. And the brand is known at this point. So we do have that going for us versus some other companies that may also have their brands known or not. But ultimately, there's no marketing or consumer knowledge that we can, or education, I should say, that we can impart on the SQDC or its customers. It's literally just let the market figure it out. Hence, my emphasis on providing a top quality product in a very cool, sleek tin, by the way, kind of reminiscent of, if there's anybody on the call that's a little bit younger or a little bit older, people used to put their joints and their loose cannabis in a little Altoids or a tin of some sort. This is kind of like that, but fully branded. It looks sleek. It's cool. It's got a little weight to it. The cartridge is clean. The product is phenomenal. So I think ultimately quality will speak.
Mm-hmm. And then Eric, one more question from me before we open up to the audience. As far as revenue recognition, so in about 3 weeks, you're going to launch the product. What point do you actually get to recognize the revenue here? Is it when it gets into the stores, or is it after it's purchased at the store? I'm trying to get a sense of when we might know financially when you're seeing success here.
Good question. So the revenue recognition is when the product has landed at the SQDC store. So we ship to every SQDC. It's 108 stores every single week. That's just the distribution model in Quebec. And our product is always earmarked to land on Thursdays. So by Friday morning, accounting can recognize that as revenue. That is for product that's shipped to the stores. Online is more of a consignment model. So the SQDC can order a variety of products to go online, but they won't pay you out in the 30-day terms that they have until they've sold it. So you're just holding inventory with them there. So that's, of course, reflected in our financials and in the notes thereof as well. As far as and I'm not sure if your question involved, like, I forget, quarters and when,
I guess that would be helpful. Yeah, like when, it sounds like you're going to get an impact in this quarter, right? As of next month. So we should see some signs. I guess that's Q4 for you. I can't remember if you're a calendar year end. So your April report probably is going to show some signs of success here. That's kind of what I'm expecting.
So our year end is actually July 31st.
Okay.
So we're just at the tail end of Q1 2026.
Yeah.
So we launched these late November. So a month into Q2.
Yeah.
Q2 would end of January. So you'll begin seeing sales thereof in Q2 26 or a portion. And then you'll see what it looks like sold straight through an entire quarter only as of Q3, which starts February 1st, 26.
Right. Okay, good. That's you've answered my question then perfectly. Okay, well, listen, let's jump to some of the questions we've got here. I've got one from Mark who says, I'd be interested in hearing more about their vape product quality and the process they went through to assess product quality and over what time period they made this assessment. Also, who is making their vapes for them? Is that information you can tell us?
Yeah, sure. I mean, who's making the vapes? No, I can't disclose that kind of information. Apologies to whoever the gentleman is that asked the question. As far as quality, we actually have, by the way, I don't know if I made this distinction early on. We actually have 3 vape cartridges. 2 of them are going in store. So there'll be 2 of the 25 cartridges sold in store. But online, there will be 5 extra cartridges for a total of 30. And we have 1 of the 5 additional online. So 3 vape cartridges. But online typically is about 5% of the sales volume. But sales nonetheless and worth noting. As far as quality goes, our products are not based on a rosin. We chose to basically have them based in a distillate. And the reason for that is quite simple, is when blended with something to dilute it, we've found that the product doesn't crystallize and provides a much smoother smoke than you might see with a THC reduced rosin or resin for that matter. So this was a series of tests done over about a period of 4 months. And then based on that, we landed on distillate, and then we expanded on the distillate category to really come up with the best possible product. In the case of the Afghan Gold one, while remaining true to the Afghan Gold aromas that the customers know and love. In the case of the other one in store, which is based on a cherry blossom strain, trying to stay as true as possible to that strain in terms of aroma and smokability, but also diluted, of course, to get under the THC 30%. So it happened over 4, even almost 5 months before we made that decision. And then, you know, of course, we shopped the market for cartridges, knowing, and it's actually been a blessing that Quebec hasn't opened it until now, because the rest of the country has essentially done the testing for us. So we know from experience which cartridges work, which don't, what consumers like and don't like. And so we were able to draw that information from everything that's known out there in the rest of the country and really apply it as a best practice for our products.
Gotcha. Okay, next question. Mark says, regarding the end of the nursery program, when do those products go to all the stores?
So the nursery program doesn't exist, or is about to be eliminated. They get distributed to all stores the week of, and I'll give you guys exact dates. Just give me a quick moment.
Mm-hmm.
The week of, so they'll land in stores the 27th of November. So depending on when the store, they'll get the box the 27th, which is a Thursday. Stores, some store managers sometimes only will scan that in the Friday or the Saturday. So we expect to actually have products selling by the Friday, but not in all stores, but at least by the Saturday or Sunday, it's available for everyone across Quebec. Gotcha. Perfect.
Okay, and last, next question says, please discuss battery margins and battery sourcing.
Sure. So let me preface this by saying, typically, as I mentioned earlier, we provide instruction to our suppliers and tell them we want, you know, a CBD capsule, 30 milligrams of CBD, 30 capsules in a jar. The jar needs to be white. This is the brand you're going to apply to it. That's how we roll for everything, except for the batteries. So we're not a battery producer. We're not known for that. So instead of applying our brand to the battery, I approached C-Cell, which is world-renowned battery and cartridge manufacturer, and explained to them the opportunity. And so they provided me with some batteries, which I submitted to the SQDC, which I take on consignment, by the way. So it's zero impediment to our cash flow at all. And I chose, and this was part of the reason they were okay with this deal, is because I chose to use their branding on the packaging. And they love that. And I thought it was a great idea as well, for the simple fact that C-Cell is world renowned. People know what C-Cell is, especially in the cannabis community. So it's a brand that's built a certain level of trust and recognition. And so I'm essentially piggybacking that, while at the same time being the exclusive battery supplier for the SQDC from C-Cell. The margins on that are about 23%, 24%, somewhere right around there. So it's not a huge margin, but we don't operate on big margins. Plus, it's on consignment. The battery they expect, and this is unknown, we don't know if the SQDC is right or wrong about this. They expect us to sell about anywhere from 3,000 to 8,000 batteries a month, consistently for God knows how many years to come. So I think that's a very nice addition. It's kind of an effort-free 23 or 24 points to the bottom line. That's in reality cost-free.
Mm-hmm. And what do one of these batteries cost? What's a retail price in something like this?
Retail on our battery is going to be, I believe, $8.90 or $9.90. I forget precisely right this moment, but somewhere right around there. Basically, we're making a couple bucks a battery. What it works out to.
I gotcha. Perfect. Okay, I know we touched on this question earlier, but I'll ask it again. Dominic says, do you have the working capital required to take on this challenge? Maybe give us a sense of what do you expect the capital requirements are, let's say over the course of the next year to fulfill this program?
I mean, the short answer is yes. And that's because we're supported by the manufacturer, who is very keen on all of this. I mean, they've got an entire team over there dedicated to the whole thing. Furthermore, we only incur a portion of those costs upfront anyway, and then once we receive payment from the SQDC, of course, we remit payment to them. Now, that said, if this were to skyrocket and go, crazy beyond everyone's expectations, of course, there would be more capital needed to inject, but we also have them on the other line that does not want to lose this business. Nor do we. And to answer the question quickly, I don't see a situation in which we find ourselves needing more capital to support the inventory needs of this. Though it's not impossible, if ever we get there, it'll be a fantastic problem to have.
Yeah, no doubt. Okay, another question from Mark. He says, how many different suppliers are there that can make vapes for you? How big a pool of companies did you consider in your research?
We considered 5 companies in our research, and we dialed into one in particular based on other vape products that they make and export as well, by the way, based on their knowledge of extracts, the manufacturing process, their formulation process, all of that. We really identified them as the best possible scenario for us. And they demonstrated a huge willingness and understood the opportunity. Although there's others that did as well, they were really the ones we chose based on those factors.
Gotcha. Okay, and the last question I see here is, what's the insider ownership of the business? How much do the insiders own of Mercanto?
So I myself own about shy of 40%. I want to say 37 or 38%. Of this company, something like that. It's about 19 million shares. Quick note on that: I'm of course the founder of this company. I'm also its largest investor by far. I have about $1 million in this venture. I've never sold a share of this company on the open market or otherwise. In fact, I've done the opposite. I've made pretty consecutive buys over the past 4 or 5 years, at least since we've been public in late 2021. I was buying at 17 cents. You can check SETI. Don't quote me on these numbers because I don't remember them exactly, but like 17, 14, 10, 8, 4, and 5. I've just been buying some as I go along, not huge amounts, but still, when I think the price is good, I might buy a few shares. Then you have our CFO, Scott Jardin, who also owns about 8 or 10% of the company. He's invested substantial of his own capital as well. There's a few shareholders on the board, of course, and then there's a few brokers that are very friendly to the company, believe in the vision, and some shareholders I'm in contact with pretty regularly, who are just sitting on it, waiting for us to continue to execute.
Eric, we've been following the cannabis space now for a couple of years. It's gone through its convulsions and gyrations. Where do you see the industry right now from your standpoint? What's the investor appetite look like from your sort of viewpoint? What can you tell us just in general with the capital markets and cannabis?
I'm seeing a bit of a reinvigoration and a renewed sort of interest towards cannabis. And I say that because it was kind of dead a year ago. You would say cannabis and people would run for the exit, and rightfully so. But it's kind of changed. We had recently the unfortunate situation with Simply Solventless. I was really rooting for them, and a lot of investors, probably a lot of you guys on this call as well. So that was unfortunate. I think the industry needed a sort of poster boy for the cannabis comeback, and I was hoping it would be them. That didn't pan out. Cannara's showing great signs. Kronos has its problems, but they're here, and I think they're here to stay. Organigram as well. And I am getting a lot of emails and phone calls from people who are very curious because they're seeing low valuations, They're seeing some consistency and longevity. They're trying to pinpoint who are the guys who are going to be here 3 to 5 years from now. And I feel like the questions I'm getting are a lot more poignant. What's the future like? They're dissecting the financials. They want to understand the products. They want to understand the opportunity, in particular with regards to this vape launch recently. So yeah, to answer your question, I think there's a bit of a reinvigoration going on. I'm seeing a lot of renewed, maybe not people just crazy buying or anything, but they're keeping an eye out. That's for sure.
Awesome. Another question that's come in from the audience. Dominic says, where do you see the Mercanto in 3 years from now?
That's a good question.
Hard to imagine. You would have known what the last 3 years were going to look like, let alone the next three. So
yeah.
What do you see? Let's take out your crystal ball and take a good look. What does it look like?
Let me rub that crystal ball, make a prayer. No, in all seriousness, Paul, I mean, look, I think we've withstood the test of time. We've proven our business model at this point. We've taken the hit of the rationalization. We've had other trials and tribulations over the past 3-4 years, and we're still here. We're still standing, and we will be here, and we'll be farther ahead. I think that early days we didn't have the relationship and the reputation that we now have, especially with regards to our main client, the SQDC. But now we do, and so we're well diversified. We have products that are growing. We're launching these vape cartridges. So where are we going to be in 3 years? I think that we'll be in a great position. We'll still be diversified, meaning we'll be selling capsules and edibles and all kinds of things. But I think we may, be maybe not the dominant player in Quebec in terms of vapes, but if not the dominant player amongst the top guys in that. And I think that market in and of itself could make the company. And needless to say, we obviously have discussions with a variety of companies out there in terms of M&A. So there's a lot of distressed assets out there. There's a lot of potential for M&A. The situation, unfortunately, that we're in now is we have a valuation of around $4 million. So if I want to go and do these deals, it's very dilutive to my current shareholder base. So I'm trying to identify the right deals to do, make sure that it makes sense for the shareholders. So I do see us perhaps merged with, someone or a variety of those types of deals done 3 to 5 years from now. But at the very least, we'll be, hopefully dominant in the vape category and substantially higher than we are today in terms of sales. Market cap, obviously, nobody knows.
Yeah, understood. I usually ask what sort of catalyst or metrics should we as investors watch out for, but my guess is the catalyst is really the vape products that you're launching right now. Do you expect to be able to announce any sort of metrics or any kind of progress in terms of selling? Is this something where you can announce monthly sales or volumes or anything well in advance of quarterly numbers?
I can. I would be comfortable to a degree providing some information. So I'll tell you what I've got in the back of my head right now is, well, the products launch at the end of November. I think December is not going to be a good metric. We're going into the holidays. People typically consume more. So I'm not really comfortable saying, well, we sold X amount in December. Then people get in the back of their heads. That's the benchmark moving forward. It could be like it could not be. What I do believe is it makes sense is to wait until end of January. At that point, we'll have a solid 2 months of sales and then try to gauge what the stability looks like, provide the real numbers. X amount of units were sold, X amount of dollars of this vape cartridge, that one, and here's the rest of it. But always preface it by honestly just being honest and saying, like, we can't really take that time and tell you what it's going to look like in the future because it's too young to know.
Right. Fair enough. No, fair enough. Okay, so another question in from Mark. You mentioned potential mergers or M&A, but what do you think would be attractive to potential merger partner as far as your operations? What do you think would be attractive from a Mercanto standpoint?
Well, let me put it like this. So as you guys now know, we don't actually manufacture anything. So when a lot of these companies, they have the manufacturing capabilities, the cultivation, the processing, they have all of that stuff. To add products onto that production line is much less of a problem than to have to absorb another production line, okay? Which I think makes us substantially more attractive than a company that has it, because then it's just two operations that you have to find the efficiencies for, and obviously they're there, but it's a lot more work and it's a lot more expensive. Whereas they can simply, like, we can be integrated into somebody else's production line easily, you know? Not to mention that, and if you think about this logically, you know, let's say we make on a product, I'm going to throw a number out there, 25%. Okay. That's 25% above the cost that it's being sold to me. So what looks like a 25% margin in terms of a merger, depending on the efficiencies of who we're merging with,
Sure.
is, you know, could be double, could be triple, depending on how efficient they are. So it makes it that much more attractive and would be much more accretive in terms of margins and profitability. You see what I mean?
Sure. Yeah. Yeah. Understood. Perfect. Okay, good. Well, it looks like we've exhausted the questions for the audience. We've run out of questions on my side. Eric, as we always ask, last question is key message. What do you want to make sure everybody walks away with today, knowing about business?
Just think about the market size of the vape cartridges in the three larger markets than Quebec: Ontario, Alberta, and BC. Know that those markets, 15% of that entire market is vape cartridge sales. Understand that those markets are served by hundreds of vape cartridges. Now in Quebec, these are being introduced for the first time, and there's only 25 vape cartridges in store to serve the entire market. So understand what that could represent in terms of sales. And then just remember that these are products that are not cannibalizing our existing sales. So this is simply, or we believe at present, stacking it on top of what we're currently doing. So the question really is, you know, how much faith do you have in the product that we've put forward? And is that going to represent $100,000 in extra sales, $1 million, 10 million? That's the part that nor you nor I know. But I think that's something worth betting on, and that's why we made that bet. Fantastic.
Well, listen, thank you, Eric, so much for joining us today, giving us this update. I found it extremely useful. Hopefully everyone else did as well. We've been speaking to Eric Ronsse, Mercanto Holdings, MUSH on the Venture Exchange. Eric, as always, appreciate the time you spent with us, and look forward to the next time we can chat.
Likewise. Thank you very much, Paul. Appreciate your time. Thanks, everyone.
You got it. Thank you, and bye for now.